Hey, what's up, family? My name is Brehon and I'd like to welcome you guys back to the channel where we love to focus on our own financial and personal development. Now, family, I've been going for a while. I've been working on some leadership things, and I've been very busy, but I'm back, and I hope you guys have been doing well. Well, when it comes to the market has been doing phenomenal the past week. Now, this is quite a surprise to most people who study the market based on everything that's going on in the news. And so we did have a report of over 500,000 new jobs were added to the economy last week, which could be a good sign or a bad sign. You know, more people could be signing up for extra work due to the rise in prices of their goods and services. Then also we've had gas, right? Gas prices has come down for consecutive weeks. Some prices in our food is coming down, and I went to the grocery store last week and I purchased a loaf of bread, and I couldn't believe it. It was $5 for a loaf of bread. I remember when a loaf of bread was, 67 cents a loaf. Then they went up to $1 a loaf. I thought that was a lot of money. And then recently, over the past years, it's been hovering around $2.69 to $2.99. But now, a loaf of bread is $5, man. That's just ridiculous. And so the government is trying to put measures in place to curb inflation. And the Fed, one of the measures they use is by increases interest rates. Right. So by increasing the interest rate in things, ultimately, they're taking more money out of the American consumers' hands. And as a result, consumers have less money to spend. And stores or suppliers and vendors know that they have less money to spend, and so they must lower their prices. And so you see gas prices and food prices and a lot of other things are coming down because of it. And as a result, economists and some of these big hedge funds, you see them jumping back into the market because they strongly believe that the worst is behind us. And remember, when it comes to investing, these hedge funds, these guys who had the big money in the market, they are actually 6 to 8 months ahead of anyone else in the market. So when the market was selling off 5-6 months ago, they were pretty much sitting on cash. Now they may think that we're at a bottom, and they may be coming back in. So as a result of that, you can see the S&P, which is the ETF that tracks the top 500 publicly traded companies. You can see them back in the mix, and you can see the stock market. The value of the ETF SPY has been increasing drastically over these past several weeks. Now, how long will this last? Well, we don't know how long this may last. Something else to think about is as these interest rates increase, it's going to make it more tougher for home buyers to buy homes. And also you have a lot of real estate developers who's sitting on hordes of inventory that eventually they won't be able to sell. So these mortgage companies or these real estate companies may have to offload some of their inventory. And how will they do that? Well, they can't pay the mortgage payments on some of those homes that they can't sell. They may short sale, they may foreclose on some homes. And so we're looking at that, and that's expected to have a damper on the market going forward. And there's a lot of other tremendously bad news out there. But at the moment, the big wigs are coming in. They're positioning themselves for these quick bump ups in the market, and we don't know how long it can last. And so you must be careful, because when things start to take a turn for the worse, they can withdraw their money before the market opens. And by the time you get to your money, you could be down 50, 30, 50%. Especially if you're having some options in play, you can be down 75, 80%. So you must be careful when making these plays. You must be mindful that at any given moment, the market can take a turn for the worse. But as of right now, man, we are trending up. And as you can see by the chart here, I have the SPY up, I have the weekly chart. And as you can see, man, we fell below that 20 EMA. And so the indicators that I have here today is the 20 EMA, I have the ADX, and I have the MACD. And, sometimes I go back and forth between the EMA and the SMA, the simple moving average. I really believe that, the simple moving average is one of the best indicators out there. But occasionally I may go to the EMA. All right. So the EMA gives me a tighter groove as far as the 20 previous trading sessions. All right. And I like the ADX also, because the ADX, what that does is it monitors the power of the trend. All right. It doesn't, it's not looking at price. It's looking at the trend, upward trend, downward trend, and it gives you an indication of the power of the trend. And I have the MACD, which monitors the momentum in and out of a play. All right. And we've had strong downtrend going from, actually starting in December of last year. So we had a high here, and we've had a tremendous sell-off. But the past month, we've been trending up, and we have crossed the 20 EMA. So last week, we opened above the 20 EMA, and we closed above the 20 EMA, which is a great sign that there could potentially be more upward movement. And we have momentum, right? We have the momentum crossover. So we do have a lot of momentum coming, SPY. And this white, so we have on the ADX, you have three lines here. The white line is measuring the overall trend. The red line is measuring the bearish trend. And the green line is an indication of the bullish trend, right? And so right here up top, we can see that the red line is on top of the green line. So that gives us an indication that the trend has been bearish. And the white line is the ADX. Once you get above 30, it gives us an indication that the trend is strong. And as a result of that, we had a strong downtrend, but the power of this downtrend is slowly fading away to the downside. We have the bullish strength indicator about to cross over the bearish indicator. So what this is telling me is that there is a potential that we could have further bullish momentum. We can have based on the strength of the ADX. All right. Great tool to use. Take a look at the ADX when you get a chance. But when it comes to the SPY, we are above the 20 EMA, and hopefully we can have a good few weeks. Now, based on the news, you never know what can happen, but based on technicals are telling us that we are going to have likely some more bullish weeks ahead of us. Now let's take a look at the daily candles. All right, so we take a look at the daily candles. Man, we are trending upward nicely trending upward. Again, here on the daily, the green ADX indicator, bullish momentum is on the upside. The ADX indicator, white indicator here, is giving me an indication that we are in a strong uptrend. So we good on the bullish. ADX is giving us a strong indicator. And as far as our bullish momentum, our bearish momentum, we are fading down. Okay. Now, I may make a play on SPY, but what I'm looking for on my next play is some downward movement back to the 20 EMA, right? Now, if we get back down to the 20 EMA, if we bounce off the 20 EMA, right? If we bounce off the 20 EMA, that may give me an opportunity to jump back in. But as of right now, I'm just going to sit on the sideline. I never rush my trades because I'm not a day trader. I'm more of a swing trader. I don't have an opportunity to sit and look at the plays all day long. So I think long term, all right, we are bullish, but hopefully we'll have some pushback to the 20 and we'll bounce off of that 20, and that'll give us an opportunity to jump back in. Okay, so we're looking at 401. Man, it may be hard to get back to 401, man, the way the momentum is running, but we're gonna wait and we're gonna see how things play out before we jump back into SPY. Another good one is the QQQs. And so on the weekly, again, man, we opened above the 20 EMA on the weekly, and we close above the 20 EMA on the weekly. We had the crossover, the bearish momentum here is fading out. The bullish momentum is fading upward. And so hopefully this could give us an indication on the ADX that we're going to have possibly a nice strong upward trend, and also momentum. We had a crossover here going up. So this gives us a strong indication that we could have more momentum to the upside. So this is a perfect opportunity to do a swing trade. You know, you do something with the expiration date 30 to 45 days out. Give yourself some time to, you know, if you do have a few red days, give yourself some time so the play could recover if need be. All right. We take a look at the daily candles. Okay, sorry about that. Again, daily candles, nice, beautiful daily candles. And so this is what you want. This is what you want. When you cross above that 20 EMA, we come back to the 20 EMA and we bounce off of the 20 EMA. Right. And so these are the type of plays that you're looking for. This is perfect. This is the perfect setup here. And so hopefully we could come back to the 20 EMA, position ourselves for a QQQ call option, possibly expiring 30 to 45 days out, and we could pounce on it, jump in, ride this thing on up. But if it breaks through the 20 coming down, similar to here, we can have more downward movement. Okay, but based on the indicators here, we have a lot of strength in this bullish momentum, upward momentum. So we're going to continue looking, wait for it to pull back to that 20 EMA, and we may jump in, take advantage of the strength so we could position ourselves for more money in the long term. Now, family, I hope this video added some value to you. Now, if it did, hey, please leave a like, hit the subscribe button, keep coming back for more wealth building information. Peace.